Hello everyone, welcome back to Just Invest Today. Today we're talking about a lot of new things coming into the market. We have Chicken Genius talking about he's gonna buy Alibaba. We have Jeremy from Financial Education talking about it too. I feel like YouTubers are switching their mind on Alibaba. Guys, what do you think about Alibaba right now? You know I'm a big bull. It's around 20% of my portfolio. So guys, tell me what you think about Alibaba. Let's get into this video and let's talk about what I'm seeing for the future of Alibaba. We have articles coming out saying there's 100% chance it goes up in this new year. So let's talk about it right now. So the overall Chinese market was down today. You see the Hang Seng Index down today. And this is just a 3 to 4 year bear market at this point, and it just doesn't seem to end. No one knows when this bleeding is gonna stop. And we just have to kind of sit back and relax for now until we realize, or people realize, that the stock market in China is just so undervalued and people come to their senses, but no one knows when that's going to be. We have Jeremy from Financial Education. We have Chicken Genius actually getting back into Baba, and they're making bets for the future of Baba in the next 5 years. And this is because the Chinese market sell-off is just crazy at this point, and people are starting to realize how undervalued a lot of these companies are. Even today, Baba was downtrending. PDD was up, and that's the trade most people are kind of taking. They are taking that PDD is going to outperform everything else, like Baba, like JD.com, like Tencent, because it's a younger player. It's growing really fast. It seems like it's the next big thing. So everyone's making that trade. And if people were so scared of China, why is PDD trading at a 30 PE? I keep reiterating this. It doesn't make sense. Everyone's saying China's bad, China's not good. But then we have Apple at all-time highs where 90% of the revenue comes from China. So what's going on? How are those trades so high? It's just a few companies, or just the overall sentiment of China for the other companies are very bad at this point. So let's go through some reasons why Jeremy and Chicken Genius actually came out and said they're actually bullish on China, which is surprisingly shocking for some reason. Chicken Genius was a huge Tesla bull when it had its massive run-up. That's how he got famous on YouTube. And then he kind of settled away. He got out of the way in YouTube because he already made all his money. So a lot of people kind of respect his opinion and kind of what he does. Him coming back into Baba was very surprising because he's been down and out on Chinese stocks for a long time, but he's a bull again right now because he says the risk to reward is just really good at this point because of basically what I'm saying, that Alibaba, a lot of these Chinese companies are very cheap. His next reason is that the China-USA relationship is getting back together. Our relationship needs to work, and he's seeing kind of progress in that area. If people really believe that China and USA are working together, that's when the stock is going to pop 20-30% in just one day. So that's why you just have to keep DCAing into Baba, because it's going to happen one day. It's just going to pop huge. And I'm just waiting for that day to happen. Then we have China's government doing a lot of liquidity injections into the economy. He sees that as a very bullish signal because they're just trying to plump up the market, the real estate market, the stock market, whatever market that it's just injecting liquidity into, it's going to prop up that market. So he's seeing Xi Jinping doing that at full force, and that's going to really help China kind of reevaluate to where it's supposed to be. His last reason is the AI boom. Baba's cloud growth should take off soon as AI is just getting very big and China's just on the brink of it. The cloud growth or cloud development in China is very small right now, and it has a long way to go. So he's seeing a lot of progress, or there can be a lot of progress in that. So that's going to provide a lot of revenue and just bottom line growth to Baba's future. Then we have Jeremy from Financial Education reversing his stance on China, saying he's back into the market. He sees Baba exploding. It's just too cheap at this point. And that's what a lot of people are saying. That's the sentiment kind of going around this lightly. It's growing revenue at 8 to 10%. So if it can continue that, plus the bottom line, plus margins improving, it's just going to take off. It just has to take off eventually because it gets to a point where it's just way too cheap. It's selling at a 10 PE. That's not even backing out all the cash that it has on its balance sheet, 40 billion plus. That's going to reduce the market cap by 40 billion. People are not even looking at Baba in a holistic point of view like that. Plus him and Chicken Genius said the same thing about the Chinese and USA kind of getting back together. They need to improve the relationship that they have just so both economies can do good or do better. Lastly, he said Alibaba's learning from his competitors like PDD, how PDD is taking off right now, and how Baba is going to implement some of the things that PDD is doing so they can kind of grow. And he kind of refers back to Facebook, how Facebook took from like Snapchat stories, how Facebook took from TikTok. And that's the same kind of progression he's seeing from Baba. And I kind of agree with that because Baba and JD.com are picking up the playbook from PDD, their return policy, and how you can just buy a lot of things and you don't have to kind of send it back if you don't like it. So they actually are starting to implement some things that PDD are doing. So that might have a huge improvement on just more customers and more customer trust. So let's see what happens there. Then we get to this article. Chinese stock indicator with 100% success rate is flashing buy. And basically this article is just saying that the stock market for China is super cheap and everyone kind of agrees with that. Stock earnings yields are much higher than bond yields. And this doesn't happen a lot in the Chinese market. So they're saying that this is a very telltale sign that China's recovery is like just around the corner, or when this happens, the stock market returns a lot into the future. Chinese stocks have really been so cheap. At an 8% earnings yield of the CSI benchmark is 5.7 percentage points above the 10-year yield. Since 2005, the gap has really been this big. Similarly, the dividend yield of the stock benchmark has risen above the long-term bond yields for the first time since at least 2005. Of course, it's another way of saying that Chinese stocks are dirt cheap and there's no shortage of other measures to show that. What's interesting about the Chinese version of the Fed model is that historically, it provides a very reliable signal for forward stock returns. There's been a previous periods in almost 2 decades that the stock bond yield gap has reached 5.5 points or more, including during the 2008 financial crisis and the pandemic of 2020. And look what happened after those markets. Stocks rose in the following 12 months, each time with a whopping return of 57% on average. So that's what this indicator is showing. Like, that's what we should expect. 57% recovery, but that is not guaranteed because we know the sentiment for China is just down bad. So guys, what do you think about everything going on? Do you believe in Chicken Genius's picks and Jeremy's picks? Do you disagree with them? What do you think about the future of Chinese equities, guys? Please like and subscribe to my channel. Peace.